Hi, I'm Paul Galley, one of the financial advisors here at Howard Worth. I'm going to look at two areas today: changes to pension legislation in the budget, and then the impact of the coronavirus on investments and the markets. Over the last few years, pension regulation has pretty much been left alone due to the government being focused on Brexit. There have been no major changes, so there was a feeling that this budget might be the one where things might happen. As usual, there was discussion around tax-free cash and the reduction of tax relief for higher earners, but again, both areas were left well alone. There were some minor changes, and we will look at them now. The tapered annual allowance. The annual allowance remains unchanged at £40,000. This is the maximum amount an individual can contribute to their pension and receive tax relief in a financial year. Currently, this annual allowance is reduced or tapered for higher earners. This means that for every £2 of adjusted income that goes over £150,000, the annual allowance for that year reduces by £1. The taper applies to individuals who have a threshold income, that is the gross income minus any tax relievable contributions such as pension contributions above £110,000. However, from Monday the 6th of April, the income threshold will be increased by £90,000, meaning anyone who earns under this amount will not be affected by the tapered annual allowance. The annual allowance will only begin to taper for those who have an income above £240,000. The minimum annual allowance you can currently have is £10,000, but this will be reduced from £4,000 next month, affecting individuals with an income of over £300,000. This is an excellent opportunity for high earners, in other words, individuals who earn over £110,000 and have reduced their pension contribution in previous years, but now may be able to review this contribution and increase them again to claim this valuable tax relief after April. For individuals who do earn over £300,000 and have not made a pension contribution in this year, it is well worth considering making a £10,000 contribution before the 5th of April, and it is reduced to £4,000. Just a few other little areas we'll look at now. The money purchase annual allowance. This will remain at £4,000. This means if an individual has flexi access to their pension, in other words, starting drawing a taxable income from it, they're restricted to making a pension contribution of just £4,000 per year. The lifetime allowance. From April 2020, the lifetime allowance, which is the maximum amount an individual can save into their pension pot without any additional charge, will increase from £1,055,000 to £1,073,000. And finally, just to cover the increases in the state pension, the new state pension will increase from £160.80 to £175.20 per week from April 2020. The basic state pension, which applies to people who reach their state pension age before the 6th of April 2016, will also increase from £129.20 to £134.25 per week. Now we'll move on to how the coronavirus is affecting the markets. We're obviously speaking to you today in incredibly uncertain times. The coronavirus is having an increasingly significant impact on both our economy and our day-to-day lives. In these circumstances, it is important that you all, but in particular our clients who trust us to manage and invest their money, that we recognise the current sharp falls in equity markets can be very worrying. The governments have been forced to enact ever stronger measures aimed at stemming the spread of the virus. Government action, which includes the quarantining of entire cities, restricting travel, imposing self-isolation, and restricting gatherings of people, are effectively aimed at shutting down society for an extended period of time. This has obviously negatively impacted global supply chains and levels of consumer demand. The twin shock to the economic system is unusual and damaging. The virus is taking hold in major European cities and the USA, and it will get worse before it gets better, meaning that economic recession is likely to be forthcoming. Inevitably, financial markets continue to react to the increased economic risk in the system. Equity markets have fallen sharply and volatility has spiked to all-time highs. Many share prices have suffered precipitous falls as investors have sought the relatively safety of government bonds and cash over equities, and assets that will suffer from the economic downturn and financial stress, although even these safe havens are coming under considerable pressure. It is too early to be able to suggest when the turmoil in markets will ease. Howard Worth, a focused approach. At Howard Worth, we will never try to time the markets, as it is impossible to do. As I said at the last budget breakfast, it is time in the market and not the timing of the markets. We remain concentrated on managing our range of portfolios in which our clients are invested with great care and diligence in these challenging times. We will stick to our basic principles. The long-term approach, in line with clients' risk, a wide range of asset allocations across different geographical regions and sectors. This means that we may not necessarily take significant action in market turmoil if we do not believe it is in the best interest of our investors. But it is worth pointing out that in volatile times such as these, opportunities do arise, and we will look to take advantage of those. They always say try to finish on a positive, so we're recording on Friday the 20th of March, so here we go. The FTSE 100 opened with a bang, and for a change in positive territory, after the world's central banks weighed in to support financial markets in the face of the pandemic. The index of blue chip stocks, the FTSE, opened 264 points higher at 5,415. It is too early to say the new policies are working, but at least there is an appreciation in the markets that central banks are taking the situation seriously. The travel stocks were in demand early on, with intercontinental hotel groups up 15% and Carnival steaming ahead 13% after both issued updates. Buyers crept back into the market for WH Smith, which surged 18% higher. The retailer, which has a chain of outlets in airports and train stations, had lost 2/3 of its value. I'm sure there are a number of questions that both our existing clients and non-clients do want to ask. I would like to say that we're available to anyone during this time who would like to speak to an advisor to answer any questions you may have at all. Please feel free to call me or any of the other advisors at Howard Worth, Katrina, Gary and Richard at any point, and we'll be happy to help you. Thank you.